before we get started, I'd like to remind everyone that we are audio and video recording our meetings and ask the board if they would please remember to turn on the little button on your microphone when you have something to say on the record and press it when you're finished. We have a limited microphone capacity, and we need you to speak into the microphone so the system picks up your comments. With that, I'll turn it over to Audit Committee Chairman Durante.
The Audit Committee will come to order. I'll ask the Secretary to please call the roll.
Director Anderson?
Here.
Director Colson?
Here.
Director Lewis?
Present.
Director DeWitt?
Here.
Director Melvin?
Here.
Director Pang? Director Ross?
Here.
Director Durante?
Here.
We have a quorum of 7 present with 1 absent. For the record, if we could also note that Directors Buchanan, Frega, Fuentes, McAllis, Totten, Troiani, and Chairman Dillard are also present, and that Director Ross has completed the necessary paperwork to participate via telephone.
Item 2 on the agenda is the approval of the minutes from the meeting held on March 19, 2015. Is there a motion?
So moved.
So moved by Director Melvin, seconded by Director DeWitt. Roll call.
Director Anderson?
Yes.
Director Colson?
Yes.
Director DeWitt?
Yes.
Director Lewis?
Yes.
Director Melvin?
Yes.
Director Ross?
Yes.
Director Durante?
Yes.
7 ayes and 1 absent.
Item 3A and 3B will be a combined presentation on an ordinance approving the combining financial report and certifying compliance with the RTA Act recovery ratio requirement for 2014, and an ordinance approving and releasing the RTA 2014 Comprehensive Annual Financial Report. B.
Thank you, Chairman Durante. The next
Microphone.
The next 2 items of the Audit Committee agenda consider ordinances approving the RTA 2014 financial statements. The first ordinance approves the 2014 Comprehensive Annual Financial Report, or the CAFR. The CAFR covers only the RTA reporting entity. The RTA Act and our bond covenants require us an audit of the Comprehensive Annual Report. We have with us today representatives from our audit firm, McGladrey, to cover topics required by the auditing standards. The second ordinance approves the 2014 Combining Financial Report. This report represents a compilation of the financial results of the RTA and the service board, CTA, Metro, and PACE. The RTA Act requires this report in order to provide an overall financial picture of the entire RTA system. Our external auditors do not audit these financial statements, but they do review the compilation. Each service board's auditors issued an unqualified opinion of the service board's 2014 financial statements. The ordinance certifies that based on final audited results, the RTA system achieved a 53% recovery ratio for region-wide and a 10% for regional ADA paratransit services. In addition, given the importance of meeting this RTA Act requirement, we have requested that top financial officials of the CTA, Metro, and PACE to certify the figures they provided to us to calculate the region-wide recovery ratio. I'm pleased to report that we have received the certification from each of the 3 service boards. Based on this information, the ordinance finds the system revenue recovery ratio in compliance with the RTA Act. Now I would like to turn it over to our external auditor. Joe Evans is a senior partner with McGladrey and lead partner on the RTA audit. McGladrey is the 5th largest CPA firm in the nation and has a specialty serving governments like the RTA. Joe Evans has over 30 years of experience performing audits of our governmental entities and a significant experience with all aspects of government operations. Joe?
Thank you, Bea. What I'd like to do is run through the required communications and give you a status update as to the fiscal audit this year. The first slide in our presentation is just an introduction. As Bea mentioned, I'm Joe Evans. I'm the lead service partner. Sean Hickey, who's with me here today, is the senior manager who also served on the engagement. As part of our work, we also engage a DBE firm to work with us. That firm is Prado and Renteria. They participate primarily in the compliance and the single audit phase of the audit, and they work directly under our supervision. So there's all of their people report directly to us. The next slide shows our scope of services. As B mentioned, we audit the Comprehensive Annual Financial Report, or referred to as the CAFR. We also compile the financial statements of the service boards and the RTA into the statutory compilation report, which is required under the RTA Act. We audit the Joint Self-Insurance Fund, the pension plan, the single audit, which refers to the federal monies, and then we also have some audit findings that we will discuss with you. Continuing on under the heading of required communications, the first item has to do with the opinions received on the financial statements, and I'm happy to report that all of the opinions are unmodified. These are clean opinions. It means that you met all of the appropriate standards, and that covers the RTA CAFR, the Joint Self-Insurance Fund, and the RTA pension plan. Another matter we're required to discuss with audit committees is any significant accounting estimates included in the financial statements. And there are two very large numbers that are estimates. One of those is the swap valuation. And this year, the swap valuation resulted in an unrealized investment gain of $1.1 million. The other large estimate included in the financial statements that involves a lot of judgment is the actuarial computation of the unfunded pension liability, which, based upon the current standards, GASB 27, is at $53.4 million as of today. Continuing on with the required communications, there were no disagreements in the audit process, no consultations with other accountants, no major issues discussed prior to our retention. There are no alternative or unusual accounting treatments, and there were no audit adjustments. Other information that's included in the financial report includes management's discussion and analysis, which is management's review of the financial matters and a discussion of the changes between the years. And also there's required supplementary information, which is not audited by us, but it's required information by the Government Standards Board. We receive a written representation letter from management indicating that they've been truthful to us and they've supplied us all the information we've asked for. We've had great cooperation with everyone and full and open access to the entire organization. So a very smooth audit process. At this time, I'd like to just highlight a few key items in the Comprehensive Annual Financial Report. One thing that should be noted is this is the 20th straight year that the report has received the GFOA Certificate of Achievement. That is a very prestigious award indicating that you've met all of the requirements of the program and all of the disclosure requirements, so congratulations on that. Just a couple of key items within the governmental funds. The sales tax revenues increased $2.9 million this year as compared to the prior year actual. However, state capital grant revenue decreased considerably, $196 million as compared to the prior year. So on the expenditure side, our total expenditures decreased by $250 million, and of course capital grants then decreased by $167 million as compared to the prior year because the revenue of the revenue decrease. As far as the combining financial statements go, as B mentioned, each individual service board has their own independent audit done. They all received unmodified opinions, and those reports were furnished to us, and each service board certified their recovery ratio. This report is the report that's submitted to the state in connection with the RTA Act, and the region-wide recovery ratio was met, the requirement being 50% and the actual at 53%. The region-wide paratransit revenue recovery ratio was also met at 10%. With respect to the other audits we perform, the Joint Self-Insurance Fund has a net position or a net equity of $27.7 million. During the year, RTA transferred $6.3 million to the fund in order to pay for insurance premiums, and the insurance premiums were about $5.8 million, which is about the same as it was in the prior year. The pension plan, which covers the non-union employees of RTA, PACE, and Metra, based upon the current rules in place, GASB Statement 27, the plan is 77.14% funded compared to 70.46 as of the beginning of the year. So the contributions of $13.7 million were made. Investments had a gain of $3.7 million. Next year, GASB 67 will be implemented for the plan, and that will have a change in the actuarial calculations and some of the reporting requirements, and will result in a slightly lower funded ratio because of the new requirements. As far as the federal programs go, we performed the single audit. This covers the transit service program cluster of about $2.2 million in expenditures. This includes the job access reverse commute programs and new freedom programs. There were no issues with the single audit, no findings, and everything was found to be in compliance. We do have a few findings as a result of the audit. These are items that are not considered material weaknesses or significant deficiencies, but these are control matters. The first item has to do with the RTA implemented a new system for making investments this year, and we found that the documentation of the controls over the system hadn't been updated for quite some time, and there was a potential weakness because the same individual that could make the investment could also transfer the cash. And as accountants, we believe those functions should be segregated. The person who initiates the transaction should not be the one who actually moves the cash. The second item has to do with the inventory of assets, and the bottom line here is the inventory hasn't been updated for several years, and it needs to be updated. We've discussed both of these matters with management and the chair of the audit committee, and resolution has already been put in place by management. I've been mentioning new accounting pronouncements a little bit about the pension plan, and it's worth talking about, so I put this slide in. GASB 68 is a new accounting standard that will be required to be implemented next year, and essentially what this does is it takes the net pension liability of all governmental entities, which has just been reported out there in some notes, and it requires you to actually book that liability on your financial statements. So in your case, we talked about the unfunded liability in the $50 million range, and that also relates to PACE and Metra, so that will be divvied up among the three entities. But the key point here is all governments now will be required to record this liability on their financial statements, and those that have very significant liabilities, obviously it's going to be a very big hit to their financial statements. So just to wrap things up, it's really good news. All the audit reports receive unmodified opinions, meaning you've met all the appropriate standards. We had no material weaknesses and no significant deficiencies. We did have the two control items that we discussed with management. There were no exceptions to the single audit, and I'm happy to report the audit was completed on time and on budget. So with that, I'd be happy to take any questions.
Are there any questions or comments? Director Lewis?
Joe, you mentioned you partnered with Product and Renteria. How much of the work approximately was given to that firm?
Our contract calls for 10% DBE participation, so they, and we met that percentage.
Thank you.
Director Magalas?
I think it was a good audit. I mean, funded is outstanding. Compared to what you read in the paper about other units of government, certainly that's a great achievement. And even with the new calculations, with it being over 70%, we're going to be in that pretty close to that neighborhood, I would think, with a $50 million liability.
Director McAllis, we're at 77%, and even with the new, under GASB 67, we'll be at 74%. And remember, this isn't a new liability. We've always had it. It's just being reported different for more transparency so that everybody fully understands what the liability is out there.
Director Colson.
Yeah, I'd like to, this thing works. It's trying to shut me off. Anyway, I'll talk about this. The question about the
John.
ADA recovery ratio, as long as I can recall, it comes in at 10% every month. And that's required. It's never 9% one month and 11% the next. And my question is that just a coincidence, or is there something inherent in the way it's calculated that it always comes out at 10%?
That is what is reported directly from PACE, and we calculate it as well. And there are certain credits, that are allowed. I provided a list, and I could provide a list to the board, but that is directly calculated based on their expenses. But you did make that point, so we're going to look at that a little bit closer.
Director Melvin's next.
Thank you. Hi, Joe. Did I understand you correctly to say that once GASB 68 is implemented, the number in the pension fund will actually go down a bit? Will the gap get a little larger on the reporting?
I probably should speak to that. The funded ratio of the pension, and remember, every year there's an actuarial expert that does the calculations based on retirements and rate of returns on investments. So based on the 2014 data, which will change, if we use that data, it would go from 77% funded ratio to 74% funded ratio, based on the new GASB 68.
And what is it that causes that change? Very, very briefly, I don't want to get into the deep details.
No, it's just actuarial calculations, and they're just reporting it. And it's Joe, you might have something more to add, but
There's a change in the rules that the actuaries have to follow that are going to cause the liability to increase slightly.
Thank you.
Director Buchanan.
Yeah, good morning. The question I have is there a plan in effect to reach 100% funding over here? It just seems like everybody's thrilled to death with 74% funding. That to me is very, very low.
because you have the best funded pension, one of the best ones, but
We work at it.
but really, in this region, this is a great funded ratio. But you're right, the goal should be 100% or close to 100%. We are working with the service boards. This would be Metra and PACE for their unrepresented group that's covered under this, to look at a plan where over a period of time, maybe 3 to 5 years, we could achieve a higher funded ratio. We do know that in 2005, it was funded, I think, at 85%. Director Durante, remember that. But 77% is very good, but you're right, the goal should be, a lot closer to 100%.
Joe, when you think about the change that's going to come in a year from now, all the governmental agencies are going to have to do this.
Correct.
Have you guys done any work that would highlight what the impact that might have, not just at the RTA, but industry-wide? So how many places will this cause some financial problem, whether it's with their debt, with any other requirements they may have? Have you done any work on that?
Well, I can't say that we've done any specific work, but we have lots of experience. And as Bea mentioned earlier, it's not a new liability. This has been out there, and it's existed for many years. It's just that it's been buried in the back of the statements, and now we're bringing it to the forefront. And in your case, the total liability is...
I wasn't talking about our case. I was talking about industry-wide.
Yeah, well,
Because now once you put it on the financials, now it gets included in any ratio that you have to
that's correct. Yes, it's included in your ratios. So I'm not sure how many of you are keeping up with the news of Chicago Public Schools, but they've been in the news a lot lately about increasing their pension fund contributions, and they have a large pension fund debt that's going to come onto their books. At the state level, there's the state teachers fund is only in the 40s in terms of pension funding. So there are billions of dollars of unfunded liability that are going to come on the books of various school districts and the state when the new standards hit next year.
Director Buchanan?
Joe, just one question, I know mine is a little bit different than the municipalities. Would that unfunded liability of $53 million, would that have to be reported on the finances of the RTA in the future?
Yes, the RTA.
So in other words, if you went out for
Metra,
bonding, for loans, for what have you, that would be on?
your share of that would be reported, yes.
But we report that today. I mean, as part of our full disclosure, we report our liability today. They're well aware of that. Our ratings have been upheld from all three rating agencies. So we do that today. But it will impact the funding ratio. Instead of reporting a 77%, we would be reporting a 74%. But again, that is based on 2014 data. So depending on our rate of return and our actuarial calculations, that could be slightly higher or slightly lower.
Director McGallis?
What is the important thing about the 50 million, it's Metro, PACE, and RTA. What is the percentage spread of that approximately? What is our board's portion of that liability?
Okay, so the split is 41% is PACE, 47% is Metro, and 12% is the RTA.
Thanks.
Any other questions or comments? One of the things that came up in my meeting with the auditors yesterday that I think needs to be reemphasized here today was the fact that only one person was doing the investments and was doing the transfer of the money. Would you get into that a little deeper now
Sure.
and explain what the new process is?
Yes, I will speak to that. So this is in the no good deed goes unpunished, right? We had a lot of paper moving through investments and trade desks. So we would call in the morning and try to get what's available for the various trades in compliance with the investment policy that this board has passed of domestic products, certain ratings of the investment, as well as how much we're currently holding in commercial paper and various things. So we implemented Bloomberg trades to enable us to take immediate action when we came up with what's available for that particular group of investment. Now, we watch very closely the funding that's coming in from the state. 5 days before it shows up on their website, we know we get it at the end of the month. We're very, very aware of what's coming in. I sit down with our treasury group, by the way, a two-person group. There's a treasurer and our investment pension manager. So it's a two-person group. But I sit down with them and we go through what we're investing. They review all the weekly investments, what we bought, why we bought it. I sign off on all of that. That was all presented as well to our auditors. The difference is that before, one would make the investment, one would identify the trades, and one would make the investment. So with two people, because it was streamlined, one was able to do both. We have changed that. I will also be a backup to move money, and our controller will be a backup. So when either one of those make the investments, the other one will actually move the money. But if not, then one of us can step in and do that money movement. So we needed to document our new process and reflect that. The good news is that by using the Bloomberg terminals, we're able to take immediate action and have been able, and you get an investment report that has shown some of the higher yields on that. So that's the explanation, and that's how we're correcting it.
So to clarify then, there are now two or more people who more or less check and double check each other.
Correct,
Okay.
correct.
Director Lewis.
B, there's probably a simple answer to this. You mentioned 3 entities when you were talking about the $53 million and the percentage breakdown. You mentioned Metro Pace. Did you mention CTA? Is that a separate?
CTA is a whole separate pension.
Okay, I just wanted to make sure of that. Thank you.
Any
So,
other
Joe-
questions or comments?
So, Joe,
Director Lewis.
did you do a separate calculation for the CTA?
No, we do not audit the CTA and did not do a separate calculation.
Okay.
Any other questions or comments? If not, is there a motion on items 3A and 3B to accept? Director Melvin, seconded by Director DeWitt. Is there leave for
No,
last
we need to
unanimous?
take a roll. Director Pang has joined us.
Oh, okay, sorry. Roll call.
Director Anderson,
Yes.
Director Colson,
Yes.
Director DeWitt,
Yes.
Director Lewis,
Yes.
Director Melvin,
Yes.
Director Pang,
Yes.
Director Ross. Was that a yes?
Yeah.
Okay, I can barely hear you, Director Ross. Chairman Durante,
Yes.
8 ayes and no absent.
Okay, if there is no further business to come before the public session of the Audit Committee, I'll entertain a motion to adjourn by Director DeWitt, seconded by Director Melvin. All those in favor, aye. Adjourn.